hardest assignments we get are the bookends.
Rather than me giving my opinion, I'm curious, where do you see getting out of debt, getting liquidity, getting diversified in today's marketplace? How important to that is that to you and Anfield Capital for your clients?
The the hardest assignments we get are the bookends. I want to be really conservative, really low risk, but I still want to make some reasonable amount of return. Those are difficult because that means you're talking, generally speaking, about a debt-based, a fixed income, debt instruments, fixed income based type of strategy, not exclusively, but largely. And as we all know, interest rates are very low. Now they appear to be ticking up a little bit, but we've got a long way to go before people are going to be happy with just the straight yield from a diversified portfolio of corporate and mortgage and government and other types of bonds, fixed income instruments. So that's a tough one because we're operating in this really constrained environment. The other difficult one is the bookend where it's, maximum growth, to heck with risk. It's never a good idea. Risk is not your friend. It's your friend used properly. It's the unexpected and undesirable and unmeasured kind of risk, which we spend a lot of time squeezing out of portfolios. That's for another conversation too. But and so that other go portfolio is also hard because it really means you have to be in fairly aggressive types of stocks and other instruments, largely drawn from the equity or stock pile, if you will, or opportunity set. So those are the toughest ones. When we get to be in the middle, we get to diversify. We can hold a range of a number of different types of instruments, asset classes, and different sectors and instruments. So we can build a richer, more robust kind of portfolio that's more likely to weather a range of storms. The storms appear to be giving us less notice, come faster, harder, and are more violent, if you will, than at periods in the past. And so that makes that's why diversification is so much more important in this environment. And the trouble is, again, we're in a strange one where some of the higher return markets are feeling a little bit frothy, a little bit overbought. Not in every case, but clearly stocks have been on a very strong run. Yields on bonds are very low. So there is a bit of a conundrum out there. What we would do is say, focus on how much risk you want to spend and let that be the governor, or the carburetor, the calibrator for how the portfolio is designed. And then let the return come along with the appropriate amount of risk. That's very important in this environment because the volatility is at fairly heightened levels, and we expect it will continue that way for some time.
Yeah, very well said. And I really connect with the storms are coming faster and hitting harder and have bigger implications at this time. And